Does paying off a personal loan help your credit? The way the economy has been, personal loans are becoming more frequent amongst borrowers. In this video, we're going to explore the different types of personal loans and how they might affect your credit score. In this episode, we'll discuss how credit scores work. Next, we'll discuss the role of personal loans and how they affect your credit. Then I'll wrap up with the credit score benefits of having a personal loan and how they affect your overall credit profile. As many of you know, credit scores impact just about every piece of your life, and many people don't realize how deep that rabbit hole actually goes. They impact just about everything. They impact employment, they impact your insurance rates, they impact actually your quality of life. What most people don't realize is there's actually hundreds of scores on the open market. And within those scores, there's many different industry-specific scores. So in general, you're going to see that scores go from 300 to 900-ish, depending upon what score you're looking at. Just know that when you're on the open market and you're looking at your credit score on Credit Karma or one of the others, understand that a lender is probably going to pull a very different score. So what is a personal loan anyways? It's actually going to be one of the different types of accounts that are on your credit. Within your credit, you have several different types of accounts. One of them being an installment loan, the next being a revolving account. The revolving account is going to be your credit cards. The installment loan is going to be your auto loan, your student loans, your mortgage, and potentially a personal loan if you have a personal loan on your credit. What an installment loan is just what it says it is. You take out a loan, let's say for $50,000, and you make monthly installment payments each month until the entire loan has been satisfied. Personal loans can be used for just about anything. The most common reason that a person will get a personal loan is for debt consolidation. They've got a whole lot of credit cards at 20% interest plus, and they decide to get a personal loan to wipe out all their credit card debt. They take a lower interest rate, and the amount of money that they're spending each month on their bills now becomes much, much lower in most cases. You can also use personal loans for home improvement. Let's say you want to add an additional room or you want to put a pool in your backyard. You can use a personal loan for that purpose. You can use a personal loan for medical expenses. You can use a personal loan for weddings, for vacations, which I don't recommend taking on debt for vacations, but some people do if they want to go to Europe or they want to spend a lot of money on a big family vacation. Sometimes they'll take out a personal loan to make that happen. Many people will take out a personal loan on big ticket items. You've got to replace your AC unit and it costs you $6,000 to $10,000 to do that. Many people will take out a personal loan to satisfy that payment and pay it out over the next few years instead of having to come up with the money all up front. My favorite thing about a personal loan is that it's actually not guaranteed, unlike some other specific purpose loans. As an example, your auto loans and your mortgages are backed by collateral. Your auto loan is actually backed by your automobile. Your mortgage obviously is backed by your home. So most personal loans require no collateral, which means that if you were to default on that loan, of course they could come after you personally for it, but they can't grab back whatever you buy with the personal loan or however you spend the money on the personal loan, which essentially means you can spend the money on a personal loan however you see fit. So now the question remains, does taking on a personal loan or paying down a personal loan, does it actually help your credit? Well, I would say, of course it helps your credit. So there's going to be a negative on your credit. Obviously, if you take out a personal loan, you're going to have an inquiry, and the inquiry is going to hurt your score a little bit. And all that means is that you've applied for credit, so that's a negative. Also, a personal loan takes on a higher assessment of risk on your overall credit profile. And the reason for that is that you're taking out money that's unsecured and it's above the amount of money that you normally make annually. So what that means is as an example, if I make $50,000 a year, I'm spending above what my income actually is to make a further purchase, right? Now, when it comes to a debt consolidation loan for credit cards, obviously you've already spent money on your credit cards and you're trying to wipe that out with a personal loan. But the risk comes into play is that you have your regular income and you're spending above that. Does that mean that it's the end of the world? No, it doesn't. It doesn't. It's a higher risk endeavor, but it doesn't mean that your credit scores are gonna take a dive. Now, if you have really bad credit, meaning you have a history of not paying back your creditors, then personal loans are gonna be very, very high interest, probably 30%, and they're gonna make your credit score go down quite dramatically because of the risk that's assessed. Now, in terms of the benefits of a personal loan, what's nice about the way that a personal loan is posted to your credit is it shows that you have the ability as a borrower to take out $50,000, $20,000, $100,000, and you're able to pay that back. So now you've built history on your credit profile that says Justin Mirche can borrow $100,000 and pay it back successfully. And that's a really big deal because the next time that you go get a personal loan, they're going to see that history there. They're going to see that you had no issue paying that back, and they're not going to think twice about giving you a really low interest rate and another loan. Personal loans also look good on your credit to get high limit credit cards. Obviously, if you've got long history of taking out and borrowing money personally, for whatever reason, and you've paid it back over and over again, credit card companies take notice of that. They say, wow, this person can take out an extraordinary amount of money, pay it back. I'm going to give them a very high limit credit card because they've got the proven track record to show that they can handle that. So besides the obvious that taking out a personal loan and paying it off on time within the time frame that the loan has stated, obviously that's going to help your credit. And as you begin to pay off that loan, your utilization on that loan is actually going to be decreasing. So you take it out for a certain amount, and over the next series of months or even years, you're paying that down. So obviously that's going to be a positive impact to your credit profile. And then of course, once you get the loan paid off, as I've already mentioned, you've reduced your overall burden on your credit profile, you've shown you can borrow money, and next time that you go to look for funds, you're going to have not nearly as hard of time. The one tip that I can give you when it comes to personal loans is though it's tempting to take out an extraordinary amount of money. There's a lot of online lenders. SoFi is one, Wells Fargo is one, Lightstream is one. They'll allow you to borrow up to $100,000 with very little paperwork, right? They're going to check your credit, check your income, a little bit of underwriting, and then you get a certain sum of money. The temptation is to overspend. The temptation is to take more than you need. The temptation is to not to save, but rather to borrow. And I encourage you to really think through those decisions, because the last thing you want to do is be in a 5-year note or a 3-year note or a 7-year note paying back $1,000, $1,500 a month for an item that you spent on, and now you've got to pay it back over many, many years. It could hurt your discretionary income. In other words, you could be broke for many years. And of course, if you default on the loan, it does dramatic damage to your credit profile.